In the words of the late Greg Plitt, "I failed" is 10 times more of a man than what if. Because what if never went to the arena. Think about that. Hello everybody. Today, as always, I am Alexander.Tatsumaki. I trade a managed account, also known as PAM account, over at InstaForex. I trade some private clients as well, although you won't see any of those charts here today. Today the discussion is about stop loss, placement of stop loss, and I thought that since I've made 2 videos already, one about the pin bar and the other about engulfing and also other formations, I thought that the third video now needs to be about placing a stop loss. And on the screen right now you see my daily swing trading system. Oh wait, before we begin, the disclaimer. What you will see here today is my ideas, and my ideas only. They are limited to that. They are not trading advice, but I do advise all of you to use this. Yeah, and it's not a recommendation for anyone to trade at all, actually. It's my ideas. The disclaimer, full disclaimer, is in the box, and there will be a link to it on top after the stream. Now, today's drink got that monster going because I'm a monster. Yes, indeed. Now, anyway, so yeah, a while back, I made a forum post. It's actually now 2 years since I made this post about placing stop loss, because I was a bit surprised about the mentality towards using stop loss. To me, it's one kind of a control method, and apparently it's one that's not always used. I have no idea why this is, but I mean, if you don't use any control method, if we're talking about Forex, I'd say you're pretty much screwed. It may look good for a few trades, maybe more, maybe 10, maybe 20, maybe even more. In that case, you're one of the lucky ones, or well, I'd say you're one of the unlucky ones, since you'll find out in at a later time that well, a control method is definitely needed when trading Forex. Because simply, if you look at the chart like this is just an example chart. I selected this one because for the simple reason that I don't have a chart, any trade on this particular chart. That's why I selected it. And let's say this is the daily chart, right? If we zoom into the minute chart, for example's sake, let's go to 5 minutes. I believe many people try to trade the 5-minute chart. And if you look at this chart, you may say, oh, but price comes from this place, goes down to here, and then chops around in that range. That may be valid for a while. That may be true for a while. What happens when price goes below it and never comes back? If you don't have a stop loss or any other way of controlling the trade, you have a problem. Because you are then standing there with a position that, what are you going to do with that? Are you going to pay the dividends, pay the swap? Or will you simply wait for it to maybe come back? Who knows, right? So anyway, the distance from the top and the bottom is 72 pips right now, which is not a lot. And if you have been into Forex for a while, you may say, oh, 72 pips, that's not nothing. There might be a bigger range and price may come back. All right, let's go to hourly chart. Let's see the biggest distance. Oh, apparently we got some huge rejection here. So the distance from the top to the bottom here is 550 pips. Now you might say, oh, if we're just staying within this range, I can trade within this range and it's fine, right? I don't need a stop, I can trade within this range. Yeah, if that was true, it would be possible. And the problem continues and escalates as we go through larger and larger charts. And eventually we get to look at the scale right here, right? On my screen it says vertical scale, it's in Swedish, right? And if you look at the number 8896, in my mind, that means we have some close to 9,000 pips for us to hit the bottom with this one. And while it may be very unlikely that the value between this pair and these two will hit 0, so if we are long, we could say, oh, let's risk the 9,000 pips. Yeah, but that's rather silly, won't you say? You'd have to make your positions so small that any profits created, you may as well be outside trying to find cans and returning them to get some money, right? Trash can, you know what I mean? These kind of things. Here in Sweden we get, for a can like this, we can get 1 krona. That is a 1/10 of a euro or something like that. So if I find 10 of these and I go to a store and turn them in, I'll get 1 euro. Question is, how long does it take to get that? And it's rather pointless. My point is, if you scale down your trading to that level, such that you risk the 9,000, and that is only for long positions, mind you. Yeah, you understand. The profits would be rather small. Because of that, we need stop losses. Ah, yes, Monster Red. Monster Red loves me. I love you too, Monster. Now, for the sake of some logical validity, I choose to display some of the positions I currently have on. I call this force price action trading system. It's traded on a daily chart only. And on this screen, you see some positions that I currently have. These are live positions, not any BS. As you see, latest position was open, the 7th is still open. And I do believe that's why it's not really registering, like I will show you in a moment. Have a look at this. Yes. As you see on the screen, it's the same. 2056 and 2067. So it's registered pretty much at the same time. I don't know why this is not registered exactly at the same place, but yeah, so total growth of 10.84 or equity 11.42. Same number that is registered here on signal start 10.43 actually. Wow. And 10.02. Anyway, yeah, this is somewhat, I'd say, showing you that, yeah, I know a little bit about what I'm talking about, right? And if you believe that you can create this just like that from nothing, by all means, go ahead and show me. And this is now coming to 4 months, this particular account, although I have ones that run much longer. And it may look like that. Let me just check one thing. Turn this off. So that's the validity thing. Yeah, we're done with that. Now let's see. I think I have a message. Let's see. Oh. Yeah, always getting those messages. Yeah. So today is the 16th. It's a Sunday, and yeah. Apparently some people work on Sundays. Actually, I just finished some food and I'm gonna hit the gym, but hey, I thought, yeah, I got this idea. I've been thinking about this for a while, and it's time to make a video about this. So let me show you what I created. I created this about 2 years ago. See here, note the date 2014 and month 10. And stop loss, control, get out of the market is the general idea. Now you may pause the video and read the text here, and while it may prove to display a different trailing stop method or placement method than what I use currently today, it shows something that I believe still is useful and is profitable to apply to the trading, right? My point is, I created this 2 years ago, and yeah, that's pretty much it. So, yeah, let's turn this off. Let's go to the screen. So, yeah, we have this chart, right? Let's select. I was on the daily. I think the daily was good, pretty much good. Yeah. Go back. We had a nice chart here, I think. Yeah, this chart is excellent. Now, for this example, we will remove these lines. It's not needed. And let's do this because I think this looks better. So to place the stop loss. One thing that's important, and the reason I trade major charts for this type of trading is considering the spread. Yeah, if you have a good broker, and this is on FX Pro, by the way, there are several good brokers. Pepperstone, Wanda. There are quite some more. But this is on FX Pro, and they have decent spreads. And if you are trading, if you want to place a stop loss, you have to take into consideration what's the spread, right? When you calculate the distance from what appears on the chart to be a top or a bottom or whatever, or some movement, what we see on this chart is the bid chart. This is the bid price, yeah? What it has been. I can't see the ask price. Maybe there's an option to actually see the ask price. I'm not aware of that in MT4 though. And so if we go to the M1, I'll show you something. Distance from here to here is 16. Spread on this actual, oh, of course, the spread is only 1.2. Naturally, of course, yeah, I'm being silly. But imagine, for example, if the spread was 10. On an exotic trade, exotic pair, like something down here, like Euro NZD or Euro AUD, it could be 10. Yeah, why not, right? Why not? But if that was the case, and if you were trading, and if you're using this mentality that I'm going to explain soon on an M1 chart, then you will have problems, because if we use this measuring tool, right? Let's do this. If we use this measuring tool, so let's say for whatever reason you are short on this, yeah? Let's say you are short here. It says entry, but I'm gonna make a thick line so it's really obvious. Then you'd want to be risking, or in your head, you want to be risking the distance up to this point, right? To this place. But for that to work, you'd had to add the spread, right? Whatever the spread is. If it's fixed, then it's fixed. If it's floating, I mean, if you have 1.2 and then 1.5 and then maybe up to 2 pip spread, you'd have to use 2 pip spread, right? Because of that, the distance we see here, you'd have to add 2 pips. Now here the price is 9050, so you'd have to move this up to 9052, meaning, look, the stop would have to be here, and then you would risk actually from here to here, but the spread is this much. Notice how large apart the spread actually is as compared to the risk you used. You risked this much, but the spread is this much. And if you really want to be sure that your price can go up to this point and then go back down, because let me tell you, if we go here and the spread is this distance, it will hit. So you need to add a little bit more, like half or 1 pip extra. So you really need to do this, right? And as you can see in this example, and I made it this way to illustrate a point. On a 1 minute chart or a very, very fast moving chart, the impact of bad spread is huge. Now I could claim that these two boxes relate to each other as 1-to-1 or similar to that, which would be horrible. you in the example, you want to risk this much, but you end up having to risk this much, meaning the risk to reward ratio here looks pretty good down to the recent bottom, right? Now disregard the fact that this particular position went up and went back down again. Yeah, disregard that. We could get over 4R, but if we have to put the stop way up here, right? It suddenly is only 2.5. That makes it rather substantially different, doesn't it? And that's my entire point. And that's also a major thing for trading M1 on fast charts. You will get a large amount of signals, but the amount of spread will be impacting your trades a lot. I mean, you're basically paying for the spread way too much. And if we take another example, if we go to the daily, can we do that? Can we go back? Can we back to the screen we had? This is the screen we had, right? Yeah, let's use this. So let's do this. Let's do this. Same example, right? Let's say on the 1 minute chart, you had to add the same amount, even talking about spread, right? To make what looked like a 4+ R trade. Suddenly it's only a 2+ R. That's horrible. Wow, that's just completely unacceptable in my mind. Yeah. On this chart though, and we have 100 pips. By the same logic, if we add the spread, and we had that a little extra piece, like a half or 1, from the distance, if we have 100, that's useful. We have to move it up to 104, and by the comparison, if we compare this, and if we compare to what we have later, we draw this like this. Notice how small this is. Notice how small this is, yeah? You see? And this is the daily chart. That's way better. And from this, if we aim to hit this 3.5, if I move the stop loss to this top of this box or use this box, doesn't change that much, right? 3.5 pretty much. Moving it up, still 3.5 pretty much. That's a major reason for if I place the stop there, and if I use daily chart, something that gives me more profit actually, because I quite simply do not pay for the spread in the same fashion. So that's very beneficial, right? Now, so that's good, I think, using charts that are slower. Yeah, daily chart, hence the daily charts, and it's very quite useful. I mean, currently in my time zone, it's at 11 o'clock in the evening, and I open the charts and I look, place trades, adjust stops, finished, check what I did if it's correct, and then I just close it. It's awesome. I mean, it costs me, mind you, I have quite some experience, but it costs me less than 2 minutes every day. But who can do that you know? Who can do 2 minutes a day and create this result? See? 11%, 2 minutes a day over 4 months. Now suddenly the results become much more impressive, don't they? And I claim that anyone actually learning these things that I talk about can do this, and if you want to do your job or whatever you do, something that you like, maybe you want to work like me. I've been training too much. I don't know if you can tell, right? But I train too much, and many years ago I had a job in a gym, right? It was nice. I went there, talked to people, joked around. It was funny. And so if you like that sort of thing, you could pretty much go and do that job 4 or 5 hours a day until you get bored, or whatever you feel is enough, until you feel good, right? Because I promise you, if you have nothing to do all day, every day, and all day every day, even though you have plenty of money, you won't feel good. That's just psychology, but that's not for today. There is a psychology video though also, which I may link here somewhere. It will appear here somewhere. Yeah. And where was I? Yes. Remove this. So my point is, with this method that I describe here, it's possible really for pretty much anyone to actually do this type of trading. And point is, if it's possible for anyone, why don't all people do it? And if you don't want to trade, that's perfectly fine. Although, if you have money left over, I feel like you should invest it somewhere, right? The worst place is to have it in the bank, isn't it? Or is it? I'm not one to give advice about those things, but that's my opinion, what I've seen. Feel free to make up your mind on that, though. Yeah. So anyway, if I place the stop above the trade here, this example is nice because I'm going to show you placement of stop and also the actual trailing of the stop. Trailing means when I move the stop in my favor more, and then more, and then later more yet again. So keep this, and let's add this box. This box can be this big, like this. And we don't need this one anymore. Oh, wrong one. Yeah, like this. So, what do we have on the screen? Let's decide, for whatever reason, you decide that this is the top. This bar closing down here forms evening star formation, and you want to be short on that. You're aiming for this here, or you may not even have a target at all, right? So you place your stop at this ledge here, right? You place your stop here, right? Or do you? Do you actually add 5 pips? Maybe you add 5 pips. Oh yeah, let's do that. Does it look good? Let's say if you add 10 pips, right? Let's check if this 10 pips. I'm not making up this stuff. It's actually 12 pips up there. Does it look good? I argue that doing it this way is the wrong mentality, and I incorporate another method. Let's place it here. I incorporate another method for placing stops where I want to lock this top in, right? And if I'm on a daily chart, and if I'm on a good broker, and I have good spread, right? 3 things. I'll just simply look at the bars, actual bars, and see what their normal size is, or their average size, or something like that. And it looks like it can be a box like this blue thing. Maybe this is a bit small, but let's say I decide in my mind, oh, this is normal size, whatever. I will actually, from having a stop at this point here, I'll add the distance of the box, the normal size, to the top, and I'll have my stop there. And 2.5 or from 3.5, but now we have room for the price actually to move to play, and a spike can happen in this area and come back. That's the point of it. It has to be able to breathe. Yes. So this is the entry, and let's change this one to red so you can understand that this is the stop. This one is not. Oh wow, that's not the right color. Red. Yeah. This is now the stop loss, right? So, for trailing, what would I do for trailing? If price, it depends on what price does and what it has done before. As you see on this chart, this is the ultimate low in between the two tops. If this is a double top pattern, then the ultimate low is this area here, right? That means we had the power to reach this, ultimately this, and go back up to this area. Before this was created, there was another top. This is pretty close to this, right? And this spike is within this zone. And so this area had the same amount of power as this. So this area, as an example, I'm not saying it ultimately will be like that, but for this particular reason's sake, let's say that this area has had the same amount of power from here up there to here up there, because, or well, actually this had more power than this, so it's more valid. Now, if the trade actually reaches this zone by whatever reason, my logic is okay. We had power to go up, and we also had now power to go back down where the power was previously. I don't want to be sitting there with a trade in profit and not locking it in. Even though my target may be here, I may not have a target. It may be a measured move from this box. I can show you that. It may be a measured move from this distance, right? Where I do this. And the target may be down here. Just an example. Now, getting the stop back. So, okay, so let's say price comes to this area. I will then want to initiate step 1 of locking the trade. These are in different phases. The first reason to lock the trade, in my opinion, is because quite simply we have decided with logic that this had the power to break the high, or if the same high double top, or if a higher high, this had the power to create this, right? So if we go back to this area from the top, it means that we're back where we started from, and I don't really want to try and see if price will come back yet again from that area, right? So as price reaches this, I will lock the trade in, and I will lock in just a little amount. How much will I lock? Probably lock like this. How much will I lock? Not any amount of pips. I will not, I don't use like a percentage. Price has to reach X% and then lock the price at +1 pip. I know some people do that, and it's mechanical for one. I don't like it because it's not alive in the same fashion as my method. So it may be better than my method, but that's not what I use. So I've seen some people do like, oh, it reaches 1.7 R and I lock it. Yeah, okay, I understand. I don't do that though. Yeah, let's where am I? Yeah. So price reaches this level and they lock the trade. Why do I lock it here? Why do I move it this distance? See, previously we had this spike, came up this area, right? And this huge spike. Right. Later we had another spike here, and this actually box here. So these two should be something like should be some problem for price to go beyond. And if we look here, there's like a one bar, another bar, and then it defeats it. So I don't like to place it right here, but just above this area, it's fine. And we have some amount of pips locking here, like 23 pips or whatever. Should be sufficient. First step of the movement of the stop loss is rather aggressive, meaning I'm inclined to move it. Give me a reason to lock the trade. Tell me that this position is wrong. It hit the zone here that I call the power zone or the break-even move zone. I will move it. Give me a huge pin bar down here and I will freaking move it. That's the first step of the locking. When the first step of locking has been done though, the strategy becomes just backwards. It just becomes the other way around. Now that the trade is somewhat secured, because nothing is 100% in Forex, we can have huge gaps and whatnot. It's very, very secured, right? So I will then be very, very, very inclined to move the stop actually at all. I will move it though, and here's some logic from that. So we are now locked in, and I don't really have to move it. And if my target was this place, it would hit here. Excellent, 2.5R. If I don't have a target, okay, screw that. Price comes here, it's not the same as this level. Price comes to this level, not the same as this level. Price comes here, which is lower than the previous lowest level we have seen on this particular chart. All we have is this particular chart right now. Price comes to the place and shows that it has so much power to the downside. There's really no there's no reason to go long, right? The power is to the downside. So I look and see, okay, we had a low here, and then we had a lower low here. In between this and this, the highest point is this area, right? So what I'll have to do is I move my let's call this average bar size thing on top of the range, right? And I'll move the trail it down to here. Very small considering the reward, but wait. Now, so later, now we have a new low, it's here. The power is here, right? Power is here, this is the lowest place we see on the chart. And price goes back up. This is the power that creates the low. This is the actual low. The price comes back down again, created by this one. So if I put this box on top of this small swing, it's like sort of like this, it would be here. Notice it doesn't touch that. It's almost 10 pips from it. It doesn't touch because spread is 1 point whatever. In this example, the stop stays there, nothing happens. And what happens again? So same low, it's already moved. It would be, I mean, this would create the same low. It means that this had the same power and I could have it higher, but I don't move the stop loss backwards. What I've locked in is what I've locked in, right? Now a new low is created, and same theory, right? This was the low, or this, and the huge, biggest top between these two is this one. And because of that, stop is here, nothing happens. Here, this bar closes below this low, new lower low is created. Between this and this, we are here. Between this low though, that is even lower, and these two, we have this high. Put the box here, move the stop down. Now, we have a new low. Same reasoning continues. We go down here, come back up, go down here. And so this is the low then. That's all we see on this chart for now. Let's see how far we can push this. So this, we had the low here. Small retrace up and then down. Now, like this, the distance box. And now we have locked in 3.5 R. Yeah, good, huh? Let's see how far we can push this. And it hits. Yeah. Could we gotten more from the trade? Yeah, maybe. But getting 3.5 R from one trade, that can make your entire month. That will make my entire month, actually. Doing one single trade like this makes them all look good. And they could all be going to flat or plus 0.5 or plus whatever. This will make it look awesome. One single trade like this. And this particular trade would have been open for, wow, 167 days. Yeah, still though, nice return. Yeah, so that's the point, right? If we see that the power, this is down the low, right? If I were to go long from this place for whatever reason, I would do the same. Let's move this box to the side. I would add the normal distance box here, and the stop would have to be below this place, right? We had power here previously to create a low, and if we were to go long from there, let's see, we're long in this place. We just belong somewhere here in this thing, whatever, for whatever reason, right? At this place, at this point, price comes back to the area where we had power, and I want to lock it. So I'll lock the trade. Maybe I'll lock it here somewhere. Probably, at least some here. And as you see, price goes up and then comes down and it hits my stop. But it doesn't matter because winning is winning. Yeah. And that's that. That's a little bit about stop losses. Let me check one thing. Yep. Yes. That's about stop losses. And let's now go on to check the daily charts. Right. So we have the euro. Currently along the euro. I like this blue area for a long. It appears to be holding for now. Let's see if it does hold. I have a small distance here between, as I just described, and this blue box here is my reason to lock that position. If we get to that level, so that's like 11.43. If euro comes to 11.43, I will then lock it, and we'll see if that happens. Nothing new on the euro really. Cable has been just falling down, not really useful. We had strength here to go down, and also later we had this area up here to go down, and it may happen that price retraces up and bounces down again from this. Who knows? Not really useful at the moment. Use the JPY, the yen. I've added a short on this power area, created the same low, and the stop is above it by the small distance, and targeting the slow, and yeah, currently this is spinning around in this place. And let's see, we have the NZD USD, Kiwi. I like these two areas as power areas. They created a top and created a new higher top. So these two for me means that we have power here to go long. And the reason I added on this was the Harami and the fact that there was decent RR up to the top, and I could actually take the trade, and even though it's plenty of pips, I could take it, and if we get to this box here, I will lock that one. No new ideas on this. The Aussie dollar, very ranging right now. The power to go long is this blue box for me. Created this new higher top here, reacted here at again same level, and currently spinning around in this spot. I would like to add a long in this blue box, but we'll see if that happens. Or if we go up to this place and get a decent signal, I might go the other way. So either these two blue boxes. USD CAD is, yeah, not useful at all. Euro Yen, I have locked this. I have since locked this trade because we hit this area right down here, and it was close to the box, but we hit it and it's locked and it's whatever. Let's move this. Yeah, reason for adding the trade was Harami. At the area, I added a small distance. You can still see the Fibonacci going up. Stop loss was up there. Now it's down here. And because this like inside bar formation created a small power bar down, and I just put the stop into this thing. And it will sit there pretty much probably until we hit, if we hit this area, that is. GBP JPY broke down through the level, not really useful at the moment. Looking for shorts, it may end up reacting to this level again, these two blue boxes, right? Or it may end up reacting here or here. Currently not really useful though. Then we have gold. Silver is horrible, and gold is this chart stopped here, as I discussed last week, and created higher top and similar level from this area as well. Broke down back to the level, and I don't trade gold on this chart and this particular account, but I would like to add along here. There's quite a possibility for trade. I mean, R3 3R is possible. So yeah, that's pretty much those charts for today, and I'm getting quite hyped up. And it's time for me to go lift those weights. And so I pretty much, since I have no questions, I will end the stream here, and I will add the trading disclaimer to the video and add the link to the other things I mentioned as well. That will happen later though. And I hope you learned something. As always, use this thing, check the disclaimer, click the subscribe button, like this video, put your questions if you have questions. If you like it, if you don't like it, yeah, it's great. Hope you learned something. Bye.